Hey everybody, Economic Ninja here. I hope you're doing great. I'm downtown Chicago as the stock market is crashing, trying to get people to answer questions about money. All right, it started with the economy, then I had to cross it out. I put money, that didn't work. And I put a money symbol because nobody wants to ask me questions. I'm not joking. I've been down here for quite some time. Now I moved to the Federal Reserve Bank. I was down in Millennial Park, got kicked out because I was told by the guards, the private security, that it's not public, it's a private park. You're not allowed to film there. I'm standing around hundreds of people taking photos of a majestic chrome bean. Nobody wants to answer questions about the economy. And today, we've got the Dow Jones down, 800 points after yesterday's fall of over 500, something like that? It's no big deal. There's nothing wrong with the economy or money. I thought I'd come down to the financial district, but couldn't get anybody to talk about that stuff. Aiden, film now, quick. This is epic. So we've got the Dow Jones down, sorry, I didn't know if, okay, I'm live, so it's no big deal. Okay, well, I'll be a while.
I just got a number for you.
Oh, you're awesome.
Yeah.
Okay, cool, I'll shoot him a call. Thank you so much, you're awesome. I was asking the Federal Reserve if it's okay to go inside the Museum of Money and film, and they gave me a phone number, so we'll take that. All right, cool. So, all right, Dow Jones down more than 800 points as recession fears dent Wall Street sentiment. And what's that sentiment? We've been in a moment where the economy just keeps going up because of a handful of stocks, right? You have a question about money? Yeah, it's live right now. You sure? Come on, anything. Stump the ninja. Come on. Oh, it's gonna be a while. I talk a lot. I talk a ton. Well, here, let's get just ask me all right, never mind. See, it's hard to answer questions about money, and then it's a bummer. But that was the second person that was approaching me about money. But when you're live, it's a little awkward, I guess, to talk to the ninja. It says here, stocks fell sharply on Friday with the S&P headed for its worst session in roughly 2 years, as a much weaker than anticipated jobs report for July ignited worries that the economy could be falling into a recession. It says the broad market index dropped 2%, while the NASDAQ composite lost 2.2%. The Dow Jones Industrial Average fell nearly 2.1%. Now it's interesting because we're in a moment as right before Lehman Brothers collapsed, right? To say that, and it's crazy to say that last year's banking collapse lost the same amount of money than what we saw in all of 2008 combined, right? So it's not, is the economy going to collapse? When's the economy collapse? We're in the middle of it right now. But all we're waiting for is a majority of the public to wake up and figure this out. And they're going to go, hey, oh crap, we're in a recession. Well, now it's stoking recession fears, right? We've already had a moment where we should have been we were in a technical recession, but the president just changed the definition of a recession. And the crazy thing is, human beings just follow. And if you think about it, a guy that can't even really talk in full, complete sentences had the ability, because of his position in office, to change a definition. That was a shout out to the ninja. All right, cool. And my point being is, I know they would love to ask me a question. Maybe they'll go park. They're spinning around right now. All right, cool. So things are happening, and they're selling off fast. And all I'm trying to do is answer some questions. I even got my coolest shorts on. I got my fancy green socks, and I'm saying, just ask me anything about finance. I even said, look, I drew a Bitcoin symbol. You want to talk to me about crypto? I'll answer anything. And I can't get anyone to answer these questions. And the thing is, we're coming into September. September is a historic month for economic tragedies, right? When the fall, I've always been saying this since I started the channel, the fall will come in the fall, right? The leaves fall for a reason that time of the season. I'm not trying to, I know I'm a poet and I didn't know it. I'm gonna stop writing it. But my point being is that we're in that moment where people have no idea that you're gonna see, once again, another at least 50% drop in major markets, just like we saw in 2008 and in right after the dot-com crash. But to say that it can't happen again is absolutely ludicrous. As a matter of fact, before both of those drops, we never saw the government, through the Federal Reserve, which is a private bank, that is a private bank, but the guards inside are federal officers, right? It's so weird that our taxpayer dollars are paying to employ people, which I love when people have jobs, but for a private bank. Most people don't know how our banking system works. So it says here, more stories right now. And we're down right now, as of the recording of this, down 769 points. just do me a favor, type 1 if you think that someone's actually going to ask me a question. I wish somebody would just ask me a question. Anybody want to ask me a question? Just go for it. Right now we've got bond yields dropping because people are racing into bonds. They're scared of where the stock market's headed, so they're racing into bonds. But you know what blows me away? The same people that are investing in bonds right now are going to end up like the banks in the next couple of years because interest rates are going to skyrocket. And the reason why I can say that with confidence over the long term, the next few years, you're going to see higher yields in the bond market, is because inflation is not going away right now because the Federal Reserve has not been aggressive enough to drop inflation by raising rates extremely high like Paul Volcker did in 1980, 1981? I mean, come on. And that's how we know. So all these people diving into bonds in fear, if they're holding them for a little too long, they're going to be just like all the banks that are failing right now because their exposure to commercial real estate, but also because of the losses they're taking on bonds. When you have long dated bonds at, let's say, a 5% rate, and then rates move up to 6 or 7, the value of that bond is dropping significantly. It is so hard to sell a bond. Think about this. And it's so simple to figure this out. You buy a bond, a $10,000 bond, yielding 5%, and tomorrow it goes up to 6, try and sell it. Everyone's looking at you like you're crazy. Like, why would I buy that for 10 grand? I'll go put $10,000 in a 6% yield. And that's where the banks are right now. It's absolutely ludicrous. Now, let's give you another shot. I mean, who wants to see the ninja? Oh, turn around. Turn around. There you go. You look at something better. So bonds are down as people move into them. We're seeing oil sell off. Oil's down to $73, down 3.3%. And look at this. Gold's selling off too. Now, gold's only down $3, right? You got $1, you're in luck. Well, gold's about 2,400 of those right now. But it's pretty much staying stable right now. But even during massive sell-offs in the stock market, gold does get hit too. Ironic, people sell off paper contracts of gold and silver and they move it into other assets, right? Primarily bonds, treasuries, things like that. All right, now let's turn it back here. Let's get serious now. So it says here, gold jumped. It's down just a couple of bucks after cooling U.S. jobs report boosts rate cut hopes. Now, remember, I've told you this before, that the Federal Reserve is going to drop rates a very insignificant amount, a couple, 2, maybe 3 times max, 25 basis points, let's say, right before the election to give you the appearance that things are good or things are rebounding. But ironically, they could also stoke fears because this sell-off that we're seeing in the stock market right now, if it continues, then they're going to sit there and go, we've got to do something by lowering rates. But they know that if the second they lower rates, people are going to flood into very speculative positions. They're going to borrow money. They're going to do some really interesting things because they're going to think that these 2 or 3 rate hikes or rate drops are going to continue falling. So they're going to get speculative. And then what you're going to see is within 6 months, 2 quarters after the rates drop just a little bit, data is going to start coming in that inflation is exploding to the upside, and like real important inflation, not the crap that they tell you is at 3%, but we're talking about food, electricity costs, gasoline, things like that. They're going to spike, and that is going to take interest rates so high your head will spin. I still stand a firm believer that you are going to see double-digit mortgage rates in the next couple of years, because they have to go that, unless the government intervenes and start printing money wildly. But then again, you're in a moment where that's only going to make inflation worse. So really, this is awkward. Anybody want to ask about money? Questions about money? Nope. I got to do it when people walk by. Anyway, I got a sign. I'm not homeless. I look like I am, but I'm not. Anyway, so gold's jumping. How many of you own gold? How many? I mean, think about it. Gold, $2,467. How stoked are you right now? Type 2 if you own gold or hashtag gold and tell me how stoked you are right now. Gold today is worth a lot more than it was a year ago. As a matter of fact, when you compare the price of gold or even silver to the S&P 500 funds, holy cow. On a percentage basis, you've absolutely crushed it since January. And you're going to be doing a lot better. But that's what scares the piss out of the Federal Reserve. You see, because as gold goes higher, silver goes higher, now Bitcoin going higher, you are going to see them, it's all compared to the dollar. Because all of those assets are priced in dollars. And so it's like this big sign, bigger than this one right here, saying the dollar's going down in value. abandon dollars. And more people, if you have more people selling their dollars to exchange it for gold, to exchange it for Bitcoin, it's going to have an adverse effect on dollar. It's going to obviously bring the increase into those other asset classes because more people are buying them. Most people don't understand basic economics 101, but it's because they weren't taught it in school for a reason. Because if you were taught basic economics, there wouldn't be any slaves working as employees. That's how it works. And big corporations, elite people, the kind of people that tell you you can't fly in planes, you need to drive electric cars while they fly to Davos in their private jet by themselves. Total hypocrisy. They can't be where they are if they don't have their factories full of all of us working for the man. And now they're trying to split us up race-wise, socially, everything. They want division in this country. Well, I'm done with it. I'm not going to do it. I'm not going to give into it. And I hope you don't either. Type 10 if you are not going to give into this division of human beings in America. And actually, as a matter of fact, if you're listening from anywhere else in the world outside of America, please let me know down below. What country are you from? Where are you listening to? And do you agree with that statement? Because it's not just a statement about an American collapse, economic collapse. It's a story about a collapse that will take out the world. Germany started collapsing, went into a deep recession in 2005. And that reverberated and hit our banking system around 2006, 2007. And by 2008, it was too much for us to bear. But then Germany was walking around like the bully on the block in 2011 to 2013, bullying other countries in the EU like Greece and like Cyprus. Because people don't understand economic history or the history of the markets, even as soon as a few years prior. I mean, think about it right now. How many of you went through the Great Recession and lost a house, lost something, right? Or you know someone that did. Type 11 if that's you. And you look now, everybody lived through it. And now people are back, but they don't own these cars cash. They're paying payments. And they're about to revert into that cycle. And my goal is to wake everybody up and be an active participant in this. You know, Douglas, thanks for the super chat. He says here, they don't need to print money to keep the world economy going due to liquidity. You know, it's interesting. We've seen liquidity crisis before, and our banking system went through one this last year because of their balance sheet issues with their bonds and with their commercial real estate holdings. And right now, you are seeing the Federal Reserve losing money. You are seeing a lot of stuff happening that is all coming together in this perfect storm. Question is, are you going to be ready for it? Hope you got something out of this. The Economic Ninja is out.